Hello everyone. This is the pre-market report video for today, 23rd Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. We know on last late Friday, both NSE and BSE announced that they will be closed on yesterday, and for that as a compensation, they did opened on last Saturday. Thus, we have to understand 3 days worth of data, Friday, Saturday and Monday price movements. So first for Friday, we did discuss in the last pre-market video, Taiwan Semiconductor Manufacturing released the report that they are expecting revenue up to 20%, which supported the whole global momentum. In line with that, our Indian IT stock supported the Nifty to close positive of 180 points, whereas again banks dragged it down. That's the short story of price movement on Friday. No special regular trade volume. Then in the aftermarket hours, Reliance Industries released their Q3 earnings. If required, please pause and have a look. Year-on-year basis, revenue, EBITDA and net profit all fell compared to last year. I mean, Reliance is the oil company, so fall in revenue always don't play the major role since that will fluctuate based upon the market oil price. But the drop in net profit and mainly ARPU, average revenue per user in Geo, comes as just 181.7 rupees against 183 rupees per user estimation. Just for comparison, in this metric, Airtel ARPU is 200 rupees per user. So in this case, Reliance missing the estimation and lags a lot behind the competition. So the moment this result was released on Friday, the GDR dropped 50 rupees per share equivalent, whereas in Indian market in comparison, it dropped only 19 rupees per share. So there is a possibility Reliance might drop today since yesterday, Monday night in GDR, it clawed back only 5 to 10 rupees. From that basis itself, we got at least 20 rupees per share downside today. However, on the positive side, as per Bloomberg, 30 out of 35 analysts still holds the buy rating. That's about the Reliance. Now let's go back to the overall market. Then Friday night, again because of the same chip stock and tech stock positivity over the AI related, after 2 years, S&P500 hits the fresh all-time high value and closed over 1% positive. So Friday night, global momentum massively improved. S&P500 fresh all-time high value was the huge thing which made the Indian market to open positive, but throughout the day it slides and closed below 21,600. Sector-wise, HFC Bank supported the market, whereas FMCG drags it down, mainly HUL which slides over 2% due to its smaller than expected quarterly Q3 profit. That's the quick takeaway of what happened on Saturday. My question is, can we trust this what happened on Saturday? According to me, no. Why? Two reasons. One, the trade volume was ridiculously low. Please look at this FII and DI trade value. I just added the Friday one for comparison. FII haven't traded not even 10% what they usually trade on the regular days. In DI case, not exactly the same but similar. They traded only for 30% of their regular trade value. Second, whoever traded on Saturday, they did it because they want to close their position, like either selling the stock or to do short covering like in the HFC Bank. Because of those two reasons, I consider this Saturday's price movement as just as auxiliary one. However, there is one takeaway. FII still keeps on selling. All those 23,500 crore rupees net sold value so far this month, everything was sold in the last 4 trading sessions, which is like oversold kind of condition. So they might turn to buy before the expiry. That's the overall summary of Friday and Saturday. Now let's see what happened last night in US market. Again, it's the continuation of Thursday and Friday. All big tech stocks supported the market on the account of AI. However, it was limited because this Thursday, US government is going to release the fourth quarter GDP growth data. And then this Friday, very important, December month PC inflation data. For one or the other reason, if the core PC inflation comes as below 3%, like even 2.9%, then that will be a huge positive influence as it directly influences the next week Fed FOMC meeting. In addition, this week, lot of tech companies like Netflix, Tesla, and Intel are going to release their earnings result. Hence, all these both macro and earnings expectation kind of limited the positivity in US market. In the end, Dow Jones up by 0.36%, S&P 500 up by 0.22%, and Nasdaq increased 0.32%. In case of VIX, it decreased to around 13 from above 14. Whereas oil increased to 2% due to the extreme cold warning in North America. And about gold, it decreased 1% as the March rate cut probability dropped below 50% for the first time in the last 1 month. At the time of this video, WTI crude oil is trading around 74.6 US dollars per barrel, whereas Brent crude oil is at 80 US dollars per barrel. In case of gold, it trades at 2022 US dollars per ounce. Regarding Indian ADR, in line with Saturday Indian market, both IT stocks closed 0.5% negative, and same for HDFC Bank as well. Whereas for ICICI Bank ADR, it increased over 3% due to its Saturday earnings result, which we will discuss in a moment. About GIFT Nifty, on Saturday, it closed at 21,611, but it haven't conveyed any one surprise thing, or we can say one takeaway is for the expiry, we got only 3 more trading sessions, but still GIFT Nifty got 40 points premium, which means market momentum is still inclined with positive side. So that's all about what happened in the overall market in the last 3 days. Let's see the stock specific information. First, about earnings. In the last 3 days after our market close, ICICI Bank, Karur Vysya Bank, Cipla and Colgate were some of the major companies who released their earnings. Let's see those in detail. If required, please pause and have a look. ICICI Bank profit increased 23.5% in line with the estimation, whereas NII increased 13%. In addition, though net NPA increased 1 basis points, gross NPA dropped 18 basis points. So overall looks ICICI Bank result was very positive, and some foreign websites started to say ICICI Bank is the new HDFC Bank kind of. In fact, this result positivity was evident yesterday in the ADR. In case of Karur Vysya Bank, I think it was even better. Both NPA dropped significantly and profit increased 42%. Hence, possibly we can expect Bank Nifty to have short covering today. Then about other two companies, Cipla and Colgate, on the top line financials, both of them did beat the analyst expectation. So most probably market to react positive bias. Second, yesterday S&P upgraded both Adani Port and Adani Electricity to stable from earlier negative rating. They cited strong business fundamentals and robust cash flow as the reason. Now, this is very much positive for both the stocks. Third, during weekend, Sony called off its merger with ZTV, and also yesterday, CLSA rating downgraded ZTV stock. So, ZTV will be on focus and I expect market to react negatively. As a summary, last night, US market closed positive and global momentum also improved, Indian ADR indicating the positive opening. But there are some concerns around Reliance and IT stocks. Here, I won't say it's negative, but might possibly drag. Recommend to be cautious. Moving on, as per stock open interest, JK Cement, Sun TV, HUL, Exide Industries, IndusInd Bank, Godrej, and Coforge got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Balakrishna Industries, Gujarat Gas, Coal India, IRCTC, REC, Birlasoft, and PVR Inox got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, Axis Bank, Indus Towers, JSW Energy, L&T Finance, Havels India, Karnataka Bank, Mahanagar Gas, REC, Tata Elxsi, Glenmark Life Science, and ICRA are some of the major Indian companies' earnings results are scheduled released today. In terms of macro, early morning before the market opening, lot of Japanese data, including Japanese Central Bank interest rate decision and economic outlook report is due. Here, both of them got the ability to impact the global momentum. Then, not much during our market time. Finally, for US in the night, crude oil stock, Richmond Manufacturing and Service Index, and 2-year note auction are some of the important items we need to keep an eye out today. Coming to technical, first Friday, Nifty closed 160 points positive, but still on the daily chart, it formed a doji candlestick pattern. We know the Friday movement was the counter trend pullback rally of the fall from 22,100 to 21,300. In that, this doji candlestick pattern and Friday's hourly momentum indicator has reached the equilibrium line, indicating that the pullback is nearing the completion. And in line with that, on Saturday, Nifty opened a gap up of 150 points above 21,700, but the selling at the higher level pushed it down below 21,600. Thus, on Saturday daily chart, it formed the bearish candlestick pattern. Just for info, in the fall, the 50% and 61.82% Fibonacci retracement levels are placed at 21,705 to 21,804 zone. So the entire zone is the resistance where we can expect the selling pressure in case if the pullback. Overall, Nifty is in a consolidation phase and expect to stay within the range of 21,500 to 21,800. Only a decisive breakout on either side could initiate a directional move. A decisive drop below 21,500 could trigger further correction towards 21,300 and lower. Conversely, a robust breakout above 20,700 is needed for the upward resumption. In case of Bank Nifty, on Friday it opened gap up but haven't hold its gain, erases all and formed a bearish candlestick pattern. Then on Saturday it opened gap up, and though there was a selling pressure, it held on to its positive gain. Thus, on the daily chart, it formed a small green candlestick pattern with a long lower shadow, indicating a potential reversal. To confirm the reversal, Bank Nifty has to overcome the immediate resistance at 46,300, and a breakthrough can trigger the short covering, which in turn might propel the Bank Nifty towards 46,500, 46,800. However, a close below the crucial support of 45,600 can lead to a correction towards 45,000. On the options front, the maximum call option open interest was at 22,500 strike, followed by 22,000 and 21,700, with new call option writing at 21,700 strike, then 22,400. Thus, the options data suggests that 21,700 will be the key hurdle. Whereas on the put front, the maximum open interest was at 20,500 strike, followed by 21,000 and 21,500, with new put option writing at 21,000 strike, then 21,100, hence with immediate support at 21,500. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.